What's up, Bueller Bias community? Bueller here again, and today I'm going to cover the BYND alert. And I'm just covering this mainly because I just covered this in a video with my private stream. I went over this in a big stream today in the chat. I dropped the link in the chat, so if you guys are in the Discord, and you can't find it, DM me if you can't find the link. But the link is in that live voice chat or on the trade floor, one or the other. But if you go through the TA routine in the BB system on BYND, it was a perfect example today on stream today when we live traded BYND. So our trade, just before I go, it was from 138.80 down to the 136.20. So a little over $2 trade, about a $2.60 move. So not anything crazy, but very nice size move for options in that amount of time. In about 20 minutes or so, very, very good move. So the big thing though was here, and I can even delete this and get all these same levels, is the TA routine. What is the TA routine? The TA routine, you start on the weekly time frame. You mark, and if you haven't seen that playlist, you need to go click on it. It's a free playlist you guys can check out on the channel, so make sure to check that out, and then I'll go back test it and review it on some of your own charts and stuff. But start off with marking emerging candles. That's really just the high of your buyer candles. Start on the left, kind of like a book. You always go left to right. And emerging candles are, your buyer candles, your main peaks over here. If you see what I mean, your main peaks, this is like a little main peak before it came back down, another main peak here. There's another one here that's already marked from this side. And you mark all those, your gap ranges, all that good stuff, go down to the daily, is really where you should be doing this, is the daily, of course. The weekly is where you should be grabbing your range. The daily is kind of for more like breaking it down and, marking these more, because you can see there's a ton more. But kind of go down there, and it'll get clustered. I'm not going to lie. It'll get very clustered on your chart, but that's okay. Again, this is for us day trading. This is, again, not to look at this for, and if you're able to look past this and look at bigger time frames, also cool. But the big thing to take in on this is for good day trading levels, so you have everything around current price going. So you got the weekly and the daily emerging candles marked. You can kind of zoom on down to the 4-hour, and you can look for a good little rounding bottom there. Nice. But instantly on the 4-hour, you want to try and grab any trend lines you can. There's not really much to grab here. But what I covered in chat today was a Fibonacci retracement. Normally I would say, watch for that downtrend change, and then you got your base build, and then you got your higher lows being made. But today I did a different explanation with Fibonacci retracements. Today we did this, and we moved down from the meat of the bone of the low here, right down here. And I went to the meat of the bone of the high, where we pushed up to. And now I have my retracements. What did I just say in all my other videos about control points? We're watching for that 50% retracement spot, so it's not crazy for this stock to keep going down more, okay? It would not be crazy to see BYND down another $10. It would actually be very healthy. It's also not crazy to see it back down to here again. For long-term talk, it's not. But for short-term here, this is where we'll be looking for slowdown in sellers, slowdown in momentum. We can start looking for another range or a squeeze or pattern play, a base to build, any kind of TA like that. But I always like to mark those 50% levels. And as you can see, we kind of already have all these marked just by going through our emerging candles. We kind of already have all the Fibonacci marked just from that move. So very cool. Also good to note the rounding bottom. It's a very strong bullish reversal after earnings. So very good to note that. And as we're sitting, the levels in which we fell from, we're now trying to sit on as support. So also noting that. And just sitting here on the 4-hour, you could see lowering sellers, and we're seeing a lower end seller today. So let's move on down to the 30-day, 30-minute. And let's mark some more levels. So just other couple levels you can mark too. And you're trying to focus around current price, but what's important is to mark as many levels of common support, common resistance, any very important levels like this right here, where it's like a support turn resistance. You have like support, then price failed to hold there, it's resistance, so it ends up going down. So very important to mark those as many times as you can wherever you see them. I'm also going to mark this level here. I like that it's a good resistance here, but also almost touched 2 more times there and there. So let's zoom on over to current price. Let's see. So the trade that we took was about 139. It was 138.80 to that 136.20. So as you guys can see, after deleting all my levels and getting everything back, you guys can see I still was able to find my trade plan. So we took puts under this level with a stop loss at 139. Price never even got back over to it, and we took profits towards 136.20s before that next 10-minute candle could close, which on the 30-minute, this looks a lot cleaner. But this is where we took our trade, was from there to about here. So a little over 20 minutes on that trade. Good job, team, if you took that with me. But I just wanted to kind of break down why we took that trade when we did. And also at the time, NASDAQ and SPY were just dropping. John Deere went up, which was funny because it's part of SPY. So that was kind of funny to see. But it doesn't always work that way. Just because SPY and NASDAQ are falling, that doesn't always mean every component in those indexes are also falling. That just means the major weights of them are probably bringing it down, or a majority of that index is bringing it down. So it could also be 100 gazillion things. So always have that in the back of your head too, awareness of the overall market and what's inside of each index. But two, a big thing just to look here on the smaller time frames, as I'm noticing this too, is rising sellers too. As you guys can see, I had a rise in sellers through the first 30 minutes of the day. That's very impressive. Normally this first candle will have the most. That's normally where your most is, kind of like this day right here. So you don't always have that. Right out of open, it was just rising sellers gradually all the way, just like SPY and NASDAQ. So I kind of took that trade like that. And then took profits right there. And yeah, I went down lower to a further target, but I really don't care. I'm really just trading what I prepared for. I already know where I'm getting out before I got in. So, if you ever get into that scenario and you want to build on getting better at trading farther, trading further out to further targets, it's all about scaling out. You're never taking 10 contracts to your last target. It's all about, let's say you have 4 contracts here. Sell 2 or 3 of them right here. I would say 3. Sell 3 of them right here, because that's your main. This is your planned trade. This is your main trade. So all of that just paid for that last contract to be on the table still. So if that does end up going lower and you could take profits on it, now you're not just taking 22% off the table. Now you're taking like 40 to 50% off the table on that last contract. So you're making a little bit more, just adding a little cherry to your dessert there. But that's kind of how you do it though. You staircase method it is what I teach my traders is, at first it's trading to that first target. For months you should be trading just one contract to that first target. Work on that. Then after that, when you get confident with those levels, now start going with trading to that second target. Sell most of your position at that first target. Try to sell one contract at that last one. So staircase it. Do that for a few months, and then so on and so on and so on. But one last note to add on here. Besides the TA routine, other levels I could have marked on here was previous day high, previous day low, and pre-market high. You don't really need to mark this one because you already kind of have a better level here. But the BB system, this goes in correlation with it. So when you have these levels from the TA routine, you now also have it from the BB system. So now we had a good plan for above and below. But being under pre-market low and previous day low is a very, very good sign. But also, most of these levels are just from the bigger time frame, so that's reassuring when you're trading with these levels, because now it's not just some random 1-minute level you found. It's a very strong, bigger time frame level. So I hope this video was helpful. I'll see you guys on the next one, and thank you. Make sure to leave a like and comment.